Hello, everybody. Today we have a very special segment all about silver, gold, precious metals, what's going on. Before we actually dive in and welcome Kirk to the show with everything that he's going to share with us, I just want to share some thoughts because we've seen a lot going on over the past few weeks, something that I think is unprecedented, something that most people have probably never seen in their lifetime with volatility in these types of markets. Silver back in December was about $60 an ounce. In January, it spiked all the way to $120 an ounce. Then it kind of went between 100 and 120. And then last Friday, we saw something major happen from 110 in one day all the way down to 74, then back up almost to 90 up until yesterday, and now back in like the 75, 76, $77 range. So while all of that's going on, we also have silver over here valued at, let's say, 75 to $80 an ounce. While in Shanghai, you have that same silver valued at over $100 an ounce. So we obviously have a lot of questions to ask. We do have Dr. Kirk Elliott here to be able to explain what's going on, what are the opportunities, is this something we should be afraid of, is this something we should take advantage of, and so on and so forth. So Kirk, the floor is yours. Please tell us what's going on.
Well, what a wild journey it's been since Friday. I mean, literally, it's just the most insane volume of calls, people having questions. And really, I'm very proud of all of the viewers, right, that are watching these shows, because we are probably 98% purchases and only 2% liquidations. Not many people are like panic selling. It's like, what's going on? I got to get out of Dodge. No, they're using it to buy on the dip, because here's the key factor in all of this. The fundamentals of the markets have not changed one iota, like at all. There's still no supply, and actually diminishing supply, and demand is still through the ceiling, right? So it's like, well, then why in the world did silver fall if fundamentals drive everything, right? And so there's low supply and high demand. Well, you have to consider what the big banks, I'm talking about the JP Morgans of the world, not regional banks, not the small ones. They have massive short positions in silver, like massive, right? And so when the mechanics of a short are, you expect the price to go down, and when it does, you make a ton of money. When the price goes up and you are in ownership of a short position, you lose money hand over fist, not just dollar for dollar, but leveraged, right? It's like a multiplier of a loss, right? So as silver started the year at 71, that's what it was in January, got all the way up to 118, literally by January 30th. It's like, okay, that's massive growth. It was up like 65% in January alone.
Yep.
These firms that held short positions literally were possibly on the verge of bankruptcy. I'm not joking with that kind of a move. It would have been bonkers, right? So what happens? They start selling. And there was a lot of false stories out there. It's like, well, this is because Trump nominated Kevin Warsh, and we don't know if he's going to lower interest rates. That has nothing to do with a move that brings silver down over 30% in 5 hours. That's not a fundamental move. That's a manufactured move, right? So
How do they
so
do that? Can you explain the process real quick? Like, I understand, okay, once there are sell-offs, there are other individuals or firms or whatever it may be that have price floors that are set to sell automatically. And then once that hits, a bunch of people liquidate or a bunch of silver is
yeah.
liquidated, and then it goes to the next one and it happens again. And it's like this waterfall. But how does the waterfall start?
So it just starts with possibly a concentrated agreement between some firms. It's like, let's drive the price down a little bit today, right? And then it's like some of the algorithmic trading and things like that start to trigger at some of these price points really started to amplify. And then it just kind of spun out of control. Now, as the price started going down, some of these firms then started to unwind their short, meaning they were selling, right? They were selling. They were getting rid of these short positions, right? So that selling pressure for a period of time during that day, there was more selling than there was buying. So the price kept coming down.
Mhm.
During this time, they unwound their short positions, right? What a lot of them, probably not all of them, because of what we see this morning and last night already. So it came down to $75, and some, the traders on our trade desk, they're looking at it and they're thinking, Kirk, this is very healthy, right? This is like the best thing that could have ever happened because if you look at like the moving average trend lines,
Mhm.
75 is like bouncing off the moving averages. And this is what this bull market has done. You'll have two steps forward, one step back. What does the one step back do? Hits the moving average, goes up, comes down, bounces off the moving average. It did it this time. Now it feels extreme because we were so overbought. Literally, we got up to 118. So normally, a corrective action like that would take weeks, if not longer, to have a 30% correction. They did it in one day, literally one day. So they unwound a bunch of their short positions. I'm starting to ask myself why and to what end and who profits and who doesn't, right? So they got rid of them. The banks definitely profited from that because now they got unwound a ton of their short positions. These short positions are an anchor to future growth, right? Because you never know when they're going to start selling them and putting selling pressure on it. It happened in one day. This is the most phenomenal gift that we could have ever had. Now, you have to have like guts of steel because it's like, oh my word, my whole retirement's going down in flames. It's like, no, it's not. It's one day. And when you consider the growth of just January, what price action when silver came down over 30% on Friday? You know what price level that brought us back to?
Mhm.
January 9th.
That was something that I caught on to, and there were so many people saying silver's crashing, and I'm like, not really. A month ago it was $60,
Yeah.
and
I
it's
mean,
still 80.
yeah, it took away 2 weeks, the last 2 weeks of profits, right? So to me, it's like, so it's going to jump back up, right? When you have a move that's that stout, it's probably not going to consolidate and go sideways for a while. It's probably going to jump back up like bouncing off a trampoline. So we got to 75 Friday night. By yesterday, it had gone back up to 90. That's a pretty stout move in 3 days, $15 move in silver. Then they drove it down again. So right now it's at 77, and it's just volatility right now, right? But here's the weird thing that's happening. And because I want to answer who profits, who doesn't, why is this happening? So
Yep.
yesterday, the Trump administration had this meeting, right, where JD Vance spoke, and there's like a consortium of about 50 countries to do what? Set up a strategic minerals vault kind of in
From what I
America,
from what I understood, they're setting a price floor for
price
silver.
floor. hmm To do what? So these massive fluctuations in price and other countries can't sell into America at cheap prices to help American refineries and the whole system, right? So no more price manipulation to these extremes. So I was putting this together in my head this morning, and we'll see if I'm right, right? So this meeting was had. You had a bunch more shorts unwinding, as silver came down from 90 down to 77. Why? Because if price floors go on it, any remaining shorts that are still exposed are really going to get hurt. So they got to unwind it right now, right? So here's the thing. In the first 3 days of this month, there's been a record somewhere between 3,000 and 3,500 contracts of silver out for physical delivery, right? So a contract is like 5,000 ounces. This is unheard of. So as this is happening, normally futures contracts settle for cash. The
Mhm.
exchange for physicals is a big deal. That means somebody is wanting delivery at these prices. Who could that somebody be? Could be the Sonys of the world. It could be the Samsungs of the world. We don't know. But my speculation is it's China, right? So China is literally out of silver. And what are they? They're the manufacturer of the world. They don't have any silver, which is why yesterday they were when silver was $90 an ounce, they were paying a premium of over $40 an ounce to buy silver. They were close to $135. Today, they're at 89 when silver's at 77, so it's still a $12 premium over spot. Why would they pay so much? Because they need it, right? So you start to put some of these puzzle pieces together, and about a month and a half ago, they decided we are no longer going to export silver to the rest of the world. They're an exporting nation, Jason. So why would you say no exports when of the refining of silver that happens globally, they're about 60 to 70% of the refining capacity. They're a big player, right? And said, we're not going to send silver anywhere. Why would you do that? Because you need it. You don't want it to leave. Why would you pay such a premium over spot when you don't have to? Because they needed to be first in line, because they need it, right? So this exchange for physicals is possibly going to China, right? So they can actually have supply and product for their manufacturers. So, and this last little, what I believe, drive down in price is because of JD Vance's comments. We're going to put price floors on these minerals, a silver being one of them. So you got to get rid of all your shorts. You just have to. So fundamentally, did anything change? No. You still have no supply. You still have demand that's through the roof. In fact, even more demand because of everything you and I have talked about over the months and year is we have a massive appetite for silver where there are no valid substitutes right now. What else are you going to use in AI chips or in cryptocurrency mining or in solar or in electric vehicles or in battery technology? I mean, there really isn't anything. You can't go back to copper. It's too slow, right? The data throughput on copper wires versus and connecting points versus silver is much slower, right? So
what happens? I mean, there's going to come a point where silver gets too expensive and they have to find a replacement.
Well, then they find a replacement. Like you could possibly use something like, you'd have to look at how the metals react to electricity, right? But maybe platinum, let's say, could be a substitute now. Well, it's over $1,000 an ounce. Yeah. Why would manufacturers do that when silver's like less than 100? They wouldn't. So you will find substitutes eventually when silver is higher priced than any kind of substitute, right? But you have to make sure that it's as good, if not better, conductor of electrical throughput, right? Because in like cryptocurrency mining, where speed is everything, processing power is everything, you can't go back to old technology. You can't, or else you're going to fall behind. So there is no real substitutes for silver right now. There isn't any. And I see a bunch of baloney stories like, oh, there's a silver graphene patent that's out there, and that's going to cause the demand for silver to go away. It's like a patent means nothing. It's just a patent. Doesn't mean that anybody's like tooled for it. It might take 10 years, if ever, before that comes into fruition, right? And who even knows what it is? Who even knows if it's real? Somebody had an idea. They issued a patent on it. Is it going to work? I don't know. But it's nothing that to anybody to be concerned about right now, right? So I look at this as the buying opportunity of a decade. When you see as much demand as we have for silver, when you see as little supply as we have, and the absolute drain on COMEX inventories over the first 4 days of this month, that screams low to no supply, extremely high demand, and that means these prices are not going to stay here for very long. That's my interpretation of this activity.
It's so interesting to see, like, first of all, you kept saying, and I just want to give you credit where it's due, end of the year, we're going to see it at 75, potentially over 100. And that's exactly what happened. And it
Hmm.
started going into the triple digits. And I kept saying in my head, I'm like, you're always going to have the risk of possible manipulation because you have different countries with a lot of power involved. And at the end of the day, we're at the mercy of that too, just like in any market, stock market, anything, you will have manipulators.
Hmm.
And the question now is, I feel like there are so many motives that certain people have of trying to keep it as low as possible for production purposes and so on and so forth. But at the same time, I'm looking at like Bank of America, and Bank of America is saying their price target is $309 for silver for 2026. Do you think that's far-fetched? What do you see the future of this being? Because it all makes sense with solar panels and electric vehicles and all that. Like it's actually needed. It's not
Yeah.
just something nice and shiny. It's actually needed. So where do
No,
you see this going now?
I think that's accurate, if not more. So I think we hit 150 plus by this summer.
Okay.
It's only 4 months away, right? So, and then by the end of the year, 300 plus. Now, the weird thing is that Bank of America, in different words, just agreed with me. So consider this. So we've talked a lot about the ratio trade of right. I think we were at 45 last week before the correction. Now we're at like 50 something. But Bank of America thinks that gold is going to hit $6,000, not by the end of the year, but by the end of this quarter, right? So
So in March.
yeah, March. So 6,000 gold at a 40-to-1 ratio puts silver at about $150 an ounce, right in line with what I'm saying. So, in different words, Bank of America is saying, yeah, silver is going to be at $150 an ounce too. So, 300 by the end of the year is not out of the realm. To me, that's a conservative estimate. It honestly is. And so, you know me well, and so do the viewers. It's like, I'm never going to give a pie in the sky projection ever. I'd rather underpromise and overdeliver. What we're seeing and experiencing is something that you and I haven't experienced in our lifetime. I don't know if anybody has, and that is this: what we're seeing in silver, this massive run up 147% last year, is not a speculative bubble, right? Like AI stocks this year, speculative bubble. Cryptocurrency, speculative bubble. Subprime lending, in 2009 and 10, speculative bubble. Tech stocks in 2000, speculative bubble. Those bubbles burst. There is really no meat behind them. This one, it's not a speculative bubble. This is truly a fundamental issue of supply and demand. What happens in a world where the manufacturers need silver and there isn't any? Sony, I'm just making up a story here, right? Sony is going to say, we will offer any price humanly possible to get it so we don't go out of business. This is the fundamental difference between speculation and actual demand, right?
Yeah.
So this is the world that we're entering into, and we get to participate in it. And that's the exciting part to me. Now you add some of these black swan events, JD Vance saying we're putting price floors in on it to protect US refineries and to stop the paper manipulation of prices, which hurts our refiners and our capacity here domestically. It's like, wow, who saw that coming 3 months ago? Nobody, right? But putting a price floor in on something that we own is really a good thing. So, anyways, I'm excited. I'm excited,
It's,
but I want to tell everybody expect volatility for the next couple of weeks.
what do you think
Don't
it
think
could
that the
drop down
sky is
to?
falling. Oh, I think we're probably close to the bottom, right? But because 75 technically is the technical target line. So, and we're at 77 right now. So there's probably a 10% chance it goes lower, 90% chance it goes higher. But what you'll probably see jumps up to like 90, 95, comes back down a little bit, and expect that for a while before we see this next skyrocket moving forward, just like we saw in January. I mean, nobody thought, no reasonable, rational person would ever think that any asset that's not some kind of a weird meme coin or speculative thing could go up over 60% in 30 days.
Yep.
That's
Especially
what silver
silver.
did. Yeah.
Yeah. It's an amazing world we're living in. I'm very curious to see what's going to happen with the whole conflict with Iran. I think that's unfortunately through war gonna impact this positively.
Yeah.
But I wonder. I mean, what are your thoughts on that? Do you think he's going to go in and strike?
I don't know if it's posturing or if it's a real threat, right? I have a feeling, this gut feeling, it's a real threat, and we do go in. I mean, there were drone attacks on, you know, activity near US targets. This is a big deal. This isn't playing in the sandbox with somebody that you don't like,
Yeah.
right? So chances are we go into conflict. Going into conflict, there's always a flight for quality. Tangible assets, not just gold and silver, but oil will go up, especially when there's conflict in the Middle East. Oil will go up. Um, and whenever there's a hurdle on the path to growth in equities or bonds or anything, which this is a big hurdle, right? Stock market loves consistency of future expectations. That's why people
Yeah.
invest in stocks. When you have a hurdle like that, war is one of the big hurdles. People pull back the reins. It's just human nature saying, I don't know. I don't know what to expect. I don't know what this is going to do. I'm scared. They don't invest, right? And so you should see price drops in normal traditional markets, alternative assets, or even fundamentally used commodities like oil and gas, gold and silver, things of that nature should go up a lot during a big conflict like that.
I got you. Very interesting times we're living in, very interesting world we're living in. I look forward to seeing what happens over the next 30, 60, 90 days with silver, with gold. I've been tracking the ratio. The ratio right now is 1 to 64, and that's up from 1 to 49 just like 2 weeks ago.
Yeah.
So
Yeah.
definitely going to be interesting to see that compress again because that does mean that silver is going to go up. Right now,
Yeah.
it's undervalued based on the ratio. So again, I'm excited. I look forward to where we will continue moving forward to. And for all of you watching, you already know this, but I'll remind you again. If you do want to book a free consultation with Kirk Elliott and his team, there's a link in the description below. Make sure to fill out that form. Somebody will reach out. Do your best to be a little bit patient. There is a lot of people now coming in to Kirk's company that he's training because of so much demand coming in, which should show you what the future actually looks like. But fill out that form. There's a link in the description below. And again, as I always say, you have nothing to lose, everything to gain. Worst case, you don't move forward, you learn something new. And that's what you will get out of that consultation. But I do believe you will move forward as well, whether it's with $1,000 or $100 million. It doesn't matter. The point is, there is room to grow and there is upside over here big time. So let's continue with the momentum. Kirk, thank you for your time. And we'll continue following this. And I look forward to our next segment together.
Sounds good. We'll see ya.
All righty. Thank you.
Subscribe.